Okay, so it's the beginning of the year. I feel like this is my favorite time to trade. Q1, maybe Q1. So Auden ZD, we've been watching this for a hell of a long time. Dolores, I don't know where. So what I was kind of talking about with you was you always start on the highest of time frames. That being because um, you were trying to ask me about like the different candlesticks and how they form. So each one of these candles, like this is the weekly time frame. So each one of these candles takes a week to form, right? And at the end of this week, or at the end of every week, one of these candles is completed. But inside of that week, if I go down to the daily, there will also be 1, 2, 3, 4, 5, 6, 7 daily candles. So every day a candle is formed on the daily chart. Every week a candle is formed on the weekly. So there'd be 7 daily candles inside the weekly. Make sense? It's all the same movement. It's just broken down. The details are smaller and smaller and smaller. If that makes sense, like you can see what's going on within smaller time frames. So it's all the same thing. It's just different ways of looking at it.
But my question is, like, say for instance, you were to take a trade on the 4-hour candle, on the 4-hour time frame,
Uh
right? You have to wait 4 hours for that candle to form, correct?
Yes.
Okay.
That's why whenever you're placing trades on like the higher time frames, like I do, like I'm on the weekly, like this,
Mm-hmm.
for example, AutoMZD on the weekly this was one big symmetrical triangle, right? So, we drew our line. This was tested 1, 2, 3, 4 times. That's where that line was. So that's a solid, trend line. That was
Right.
broken. It spiked down. I said we were waiting for a retest. That's kind of where we're at right now. So because I'm on the weekly, and this is going to take such a long time for these candles to form, I'm able to hold on to this trade for an extremely long amount of time. Like if I were to show you, I don't want to show you my screen, but I've been in this since the beginning of November. I've been in this since up here.
Oh wow.
Yeah. So it's just, if I were to take a trade on the 15-minute, it can be the same kind of movement, but it'd be a lot less time. So that's kind of the difference between the different strategies that people trade. People will trade like short term, like throughout the day. They'll trade like the 15-minute candles and, the shorter movements. Like, if I were to jump down to the daily, like on the weekly, it was just a break and a retest. I'd have my one position and I'd be holding it. But you could also go down to the 4-hour time frame, and there'd also be patterns inside of this larger weekly movement that you can execute on, because patterns, they're existing in every time frame regardless. It's just these smaller patterns in the smaller time frames create the larger movements on the higher ones or the higher time frames.
But you would have to have a good amount of money to hold those trades for a week. Like I mean, you would definitely have to
Relatively,
have
it
proper
depends. It
money
depends.
management.
If you think about it, it's all the same. If I have $100 or I have $1,000, if I have a stop loss up here, say that's because it's such a long-term trade, even if we were to go to extremely like wide stop loss of like 60 pips.
Mm-hmm.
If I were to go through, let me pull my calculator so I can actually show you. So if I want to keep my risk low, like I do whenever I'm doing long-term trades, because I know the reward is so high, I'll use somewhere between 2 or 3%. So even if I have $100, 2% is $2.
Mm-hmm.
But then again, you have such a wide stop loss, you can compensate for that by using a little bit higher of a risk. That's the only way, if you're using longer term trades, you might change it from 2 to say maybe 6 to 8% because it's such a small account and you're going to be holding it for so long and you have such high confidence that you can go ahead and use 6% and it'd be, $6. At that point in time, you could throw a .01 lot size because that's 10 cents per pip.
Right.
That'd be a $6 risk. But then again, the reward would be, let's see, we're up here on monthly. So this is, a good 500 pips. So that $6 could turn, that's a $6 risk for 500 pips. What is that? $50. So that's the same as if I had $1,000 and I were to risk. See, the higher the account size you have, the more, the easier it is for you to actually use proper risk management. Because $1,000, 2% risk is $20. So that makes, that's a .03. Not a .03, a .3. Yeah. So it's just kind of using the percent risks to your advantage, regardless of how many pips it is. Like it's on larger time frames, but it's still.
But as you say, you have to be sure. Like once you're positive, that's the direction the trade is going in. Then.
Yeah, and that's the other thing. It's because we're on the weekly, and this is such a large pattern. Like my confidence level is at least like 90% of this is coming back down. So that's 6%. Obviously we're not trading with $100. I was just giving an example, but if need be, you can use 5%, 6%. That's just kind of like whenever people say use 2 or 3% risk, it's usually from traders like investors that have thousands and thousands and thousands of dollars, so that it's not really 2 or 3% risk is still a decent amount of money without compromising their accounts. So that's why it's key. But then again, 5, 6% isn't gonna blow your account.
Right.
As long as you have a decent size, that's where risk to reward ratio comes in. Like if you have a risk up here, but your reward is all the way down here. If I do that every single trade, that means I can essentially lose 2 or 3 trades, win 1 and break even.
And break even, yeah.
So that's why, just before you take any trade, rule of thumb is one of the things that I've met a lot of traders. There's a lot around me, and I think the one thing that separates people from actually making money and being able to live off of it, and people that kind of make money and lose it, like they know what they're doing, they're just not managing it correctly. And that's, before they take the trades, they see what percentage they're going to risk, the risk to reward, and, they check the confidence level. They aren't just jumping into it. And, once you calculate all that and you have a confident trade, you can take them every single time. And that's kind of where documentation comes in. That's why I kind of preach it. It makes it a little bit easier if you're writing it down. But, because we're on we start on the higher time frame, so we get the overall movement. And I mean, from there, if you really wanted to, you can jump down to the smaller time frames, and because the larger movement, like we know it's coming down, and this is going to be the retest, we can wait for a reversal pattern like a double top or like a head and shoulders, because there's going to be patterns on every time frame, regardless. And these smaller, like the smaller time frames, make up the larger time frame movements, right? That would mean that we can find reversal patterns on the smaller time frames after we find the larger movements. So that can kind of complement our entries because we know it's coming down. We've seen the retest on the weekly of the pattern. The pattern was broken. It's retesting. We can go a little bit lower on the time frames, find a reversal pattern that's forming. Maybe it'll be like a double top. You never know. It could be a variety of things, but regardless, we can look for reversal, and then at that point, we have our entry, and then we just hold it. So it's kind of it's not as complicated as it kind of seems. But that's why I try and keep only 2 or 3 pairs in play, because it lets me, I watch it on the daily, so it's not like I'm watching it all the time. I'll just check on it once a day, see where it's at. I'll find these patterns that I have all these patterns that are on the course, but essentially they're just, giving us direction. So you said for the triangles, you're having a little bit of trouble. So essentially what a triangle is the market's coming down, there's consolidation, the price is squeezing, it's gaining pressure. And then because we have these points, all these wicks, we can actually draw lines. You'll see connecting them. And it gives us an area of pressure. So whenever this is broken, we know it's going to continue in the direction of the break, which most of the time for these triangles is the direction prior. That's kind of what continuations are. Is it's just, the price is coming down, it pauses, it's having some trouble, some pressure, the buyers and sellers are fighting each other. One of them is going to win. The buyers win, we know it's coming up. The sellers win, we know it's coming down. So that's why, regardless, we're waiting on the break and the retest, regardless of which side it breaks. Now that applies to the weekly time frame, the daily time frame, any of these time frames. That's why I said, we're on the daily. We know it's going to be coming down for the next long term. So, we're just looking on the smaller time frames for some kind of reversal that lets us know that it's doing that, or that it's ready to turn around. So that's where our entry kind of comes from.
Make a little more sense.
Yeah, does that kind of clear up? I feel like it's a lot easier to explain than to type it out. So that's kind of, oh, Ian's here. What's up, man?
Hey, I'm good.
How long have you been?
It's been a while, yeah. I snuck in about 10 minutes ago.
Oh, shit. I didn't realize.
Just listening to your dulcet tones, John, as always.
Of course.
So,
No, I was just kind of breaking down what the time frames are, because I didn't realize that whenever I teach, I forgot to break down. I don't know if I did on the course or not, but how the actual time frames break down into each other. So that's kind of what I was doing. So now that I have all you guys in here before Andy has to go, so this week we're kind of just going to be looking at a lot of the U.S. pairs, because the U.S. dollar is going to be pretty much shit for a while, because Trump's being a dick.
not for the first time.
Yeah, so odd NZD, we know it's coming down long term. We've been watching this for a long time. Kind of upset I didn't catch I didn't take profit on this spike because I'm up here, but regardless, we know this is going to be coming down. So we'll be looking for a reversal before that drops. Other than that, US CAD has been insane.
Wow.
Yeah, I'm telling you, look at this. USD CHF is what I've been in. Just because if you look on the weekly, it's a big double top being formed. So we know the dollar is going to be weakening, and as well as the fact that down here on the daily, obviously there's this double bottom. But this is what I was posting last week, was this head and shoulders That's what I was just telling, that's what I was just saying is the smaller patterns make up the higher time frame patterns. So the weekly there was a double top, but the right side of that double top was also a head and shoulders on the daily. So that's kind of another example. But there was a head and shoulders, there was a reversal, it broke, came up, it had our retest, and we've been in it since then. So you can even jump down to the 4 arrow, you'll notice.
The 4 hour looks as if it might be a good point to get back in.
Yeah, I'm saying if it kind of upset we missed that retest again, because that was a pretty solid level that it broke. But if this, because it's a level right here, because it's a level of resistance, these 2 wicks, it looks to me like it could be forming a descending.
Yeah.
So given this breaks, it'll come back up and you can get your entry. But for me, I'm seeing some kind of retest one more time, a rise before it finally, because it's still Monday. So I figure the big move probably won't happen. Big moves probably don't happen. Just another thing I forgot to go over with you is most of the time we don't trade. I know the market's open on Sunday night. We normally don't trade Sunday nights because there's a lot of manipulation. Monday morning, I kind of might trade depending on the day or like what the setup is, but I normally don't because it's still the beginning of the week. But most of the time I don't. I'll start trading like Monday night. Tuesday morning is whenever the market starts like really moving, and then up to like Thursday night, Friday morning. So midweek is normally whenever I trade, and then within that, it's if I'm trading the higher time frames like I've been explaining, then the time, like the session doesn't really matter because there are different market sessions. There's London, New York, Asian, I forgot the other one, Australian or whatever. But there's different time periods that the market kind of moves actively. So if you're trading smaller time frames like we're looking at right now, it might be helpful to pay attention. Like you said, you're kind of close to me. So the market normally moves for us, Dolores, around like it starts kind of moving around 3 a.m. and then it picks up around like 6 until maybe like noon, 1, and then it kind of slows down for the market close. So that's kind of something to
So
keep.
that's the London session and the New York session moves for us.
Yeah, whenever it crosses over, like from 8 a.m. to like noon is whenever the best for me, honestly. That's why I trade in the morning so often.
Yeah, I mean, I usually find that the waiting for the London session to open, but if you're what John's saying, we skip out the Monday, just see how the markets are moving. And then on the Tuesday morning, after London opens, that's usually when you see the real direction of the markets kicking in.
Mm-hmm. Exactly. So
given it's for me because it's daylight for me here anyway. So.
Oh yeah, you lucky. You got like the good market hours. Oh gosh. No, but because it's Monday, it's very likely that this will make a retrace one more time before we see a drop. But then again, you got to consider the dollar has been weakening pretty rapidly lately. So there's a good possibility it comes down and then retest one more time. So, but regardless, either way, we know there's a good chance it's coming back down. Especially given, Euro USD being its inverse. This is the 4 hour. We were looking at this last week. We had our ace ending. Draw a little bit better. So, given that, what did I do? Oh shit. Given that USD CHF continues to drop, and if this ascending actually that's tested 3 times gets broken, and retests, we'll be looking to buy the euro.
Well, I'm still in on Euro USD. Carried it over the weekend.
And buy or sell?
On a buy.
Oh yeah.
Yeah.
So those are the 3 that we're kind of going to focus on: Euro USD, USD CHF, because we know the dollar is going to be dropping. So kind of the mainly dollar-centered pairs, and then AUD NZD, of course, because it's just a nice setup.
Are you gonna post the setup when it's ready, or how? Like,
what's up?
Are you gonna post the setup, or are you gonna just
I can.
Okay.
Yeah, I can. I'll post the markup as well. Let's see here. Did that I don't know how much time we have left, but regardless, Dolores, did that kind of clear up the questions you had? I know I'm not the greatest at typing.
Yeah, it kind of cleared up a lot of it.
So the approach is kind of simple. We're just always going to start on the higher time frame. Yeah, see what's going on. And honestly, if you don't see a pattern on a chart, you don't have to trade it. Like, that's not, you don't have to trade just to trade. We're trading whenever we see these setups. Like, we're finding these head and shoulders patterns, like, is my personal favorite, or these triangles like I was showing you. And we're waiting for them to form. We're waiting for them to actually break, and then we're entering on the actual retest of the pattern break on the daily time frames. So we're that because of that, we have a lot more confidence with every one of our trades, because we know, these patterns, obviously there's times when it doesn't play out as the pattern suggests, but the success rate combined with, the head and shoulders pattern is like an 85-90% success rate once the pattern breaks. So if we have a head and shoulders pattern that breaks on the daily, we wait for the retest, we enter on the neckline. So, we have our head and shoulders that was on the daily. If we have this drawn out, we wait for the break, we get the retest, jump down to like the 4-hour time frame, get our entry here. There's oh sweet, sorry, Zoom popped up on my thing. We have removed this high limit on your, okay, cool, sweet. So awesome. So because this head and shoulders on the daily came up, and because it has, the 85-90% success rate, you combine that with your risk to reward ratio, your percent risk, it's very, very, very unlikely that you will not stay consistently profitable over time, given you don't waver from, actually analyzing these trades before you take them. Because, the numbers are in your favor. It's just more or less staying disciplined to using that to your advantage.
Mm-hmm.
Kind of makes it a little bit more easy than see these EMAs that come through here.
Yeah.
If it goes below, sell it. It goes above, buy it.
Right.
Yeah, I don't think so. It ain't that simple, but it's pretty simple.
I'll learn.
No, we'll get it. It's not it's not.
One day I'll get it.
Yeah, I'm not gonna say it's the easiest thing in the world, but it's not calculus 3. It'll click. If you've met Rick, I love Rick, but if you've met Rick, he came from a interesting background, never really had much education, but he kills it. So it's just
Yeah.
a skill set, repetition, you know.
Yep.
Oh, goodness. Let me go ahead.